You don't need another video teaching you about candlestick patterns. What you actually need is a video teaching you how the market actually moves. And not from a surface level, but actually understanding liquidity the right way and how ranges form within the market. Everyone talks about institutional trading. I'm going to tell you this one thing. 99% of the people on YouTube know nothing about institutional trading. And this video is going to be one of the first to ever be made. I'm going to focus on teaching you how institutional trading takes place and how me and you as retail traders can capitalize on this aspect of the market. And this exact approach is the one that's helped me make consistent profits from the markets week in and week out. So make sure you have a notepad out and you're watching until the end of this video, because I can promise you this one thing. This video is going to be the last one you'll ever need to watch in regards to trading, because I'm going to break down everything you need to know. All of that being said, let's get into this video.
So this video is going to be very specific for a very specific person. This is going to be for someone that wants to learn about the markets at a deeper level, understanding exactly what's going on, because everyone on the internet teaches the same thing. If everyone's teaching the same thing, then everything should be working, right? Everyone should be making money. Well, that isn't the case. And a lot of people say, yes, it comes down to psychology, but I think that's the biggest cope in the trading industry. Psychology is the biggest problem for traders who don't know what they're doing. If you truly understand how to approach the markets, know exactly what's going on within the markets, and you have a system which repeats, any losses you take, you trust that system that it's going to provide you with a winning trade. And that's exactly what I'm going to go over in this video. It's not made for anyone that wants to learn what a candlestick is. It's made for the people who are in the middle. You're not profitable, you're not losing, you're at a break-even stage. This video, I promise you, if you sit, listen, take note until the end, you will change your perspective about the markets, because I'm going to dive into things that no one else is taught on the internet. And do you want to know why no one taught any of this on the internet? Because they don't know it. Like, as simple as that. So the first thing you need to understand is, what are the cycles within the market? Like, what's actually moving the market? Well, it's very simple. If you wanted to send money to a friend, you have to send it through a bank account, right? You have to send it to their bank account. Do you think it just magically gets to their bank account? It has to follow a system. The market follows a system as well. And that system has been the same thing since the open outcry period, especially if you trade with CME. So if you trade futures under CME, you already know that the market is following a system. It's a tier system. And a lot of you haven't even studied this far. You don't even understand what I'm talking about. But don't worry, we are going to get into that. I'm also going to get into market making. I'm going to blend the time cycles that are important within the market. I'm not going to teach you the exact time cycles, but I'm going to teach you the ones that are important for you to make money and start moving forward in your trading journey. I'm going to teach you why liquidity is important to the market. I'm going to tell you why delivery changing at key levels is important. We're going to get into how market making blends into this, and then we're going to move on to the charts of how to blend everything together using my time-based ranges as well, which we are going to get into. So the first thing you need to understand is the cycles within the market. Every single day, there's going to be one single daily candle. So this daily candle is going to form. This is what's promised to you. This one daily candle every single day you wake up, that's what's going to be promised to you. And then there's going to be 5 of them. Monday, Tuesday, Wednesday, Thursday, and Friday. You have 5 of them. Logically thinking, this is where you have to be a professional in trading. The top level traders are the same as the top level athlete. Anyone that's making money from these markets, you should view them as a top level athlete. Do you know why? Because the statistic is so low of traders coming to a payout, making consistent money. And just in October alone, I'll post another screenshot on the screen, or if you saw it at the start of the video, you can see I had multiple payouts pretty much every single day of the week. That's consistency. That's finding something which repeats within the market. And that's something that 99% of traders can't do. And that's why I'm making this video. I'm trying to teach you what's important, laying down the foundations, telling you how the market's actually moving. So the one daily candle is promised to you, so are 5 daily candles. Out of those daily candles, you need to understand that all you need is 3 of them, capitalize on them to the fullest, or capitalize on a certain area to make money. And this one daily candle is going to be split up into something very special, and that's going to be a time cycle. So the market opens up, this is going to be one cycle. Market trades higher, another cycle. Market trades higher again, another cycle, until we make the high of the day. And then once the market makes the high of the day, this is another cycle, another cycle, another cycle, until we make the low of the day. This is pretty much all the market's doing. It's not moving in random like patterns within the market. It's moving within time cycles and real time cycles. I'm not talking about any random ones that some kid has made up on the internet that I have been seeing. It's actual market cycles from the open outcry period, like actual cycles that people have been trading since the start of time, since the open outcry period. So these cycles are very important to the market because that's how the structure of a daily candle is already printed. You need to understand that this daily candle was already printed. The high was already printed either a month ago, 2 months ago, 3 months ago, whatever. This was already made. Like it's not just randomly being made on a day and the market's woken up and it's like, okay, today I feel like making the high of the day right here. Today I feel like making the low of the day right here. The market has already planned where the high and the low of the day was going to form. There's people out there in the world that know exactly where this high and low is going to form with very smart algorithms. Us as retail traders, you need to understand we don't have that capability. If you have millions and millions and millions, I'm talking about 50 million minimum to invest into trading, you'll be able to do this. If you don't, then you got to listen up and listen exactly what I'm saying, because if you're not consistent, this is going to get you consistent. I promise. I have not only my results, but other people that are following my exact system. I might show you another screenshot of one of my one-on-one students called Zero. He's already a live funded trader at My Funded Futures. Becoming a live funded trader at a prop firm's incredibly hard. Do you know why? Because most people don't make it to consistent payouts. So showing you can make to consistent payout, it's already showing that you're in the top 1% of trading. As I said, the top 1% are viewed as athletes. So moving back onto this, you have 5 daily candles, 3 of them are your golden point. That's exactly all you need to capitalize on. And the market works in time cycles. So the cycles within the market, every single cycle has a purpose. Either it's accumulation, either it's manipulation, either it's distribution. And ICT knows all of this. He doesn't want to teach it. Do you know why he doesn't want to teach it? It's simply too good to be out there. Like, most people don't deserve to know this information because they're just going to abuse it. They're just going to say, no, this doesn't work. They're not going to put in the work. And that's life in general. Most people are going to be like this. They're going to find something. They're going to be like, you know what? Maybe it'll work. Maybe it won't. I want to see other people do well before I do that. And then when others do well, it's too late for them. That's literally life. Bitcoin in 2014 or 2011. No one wanted to buy. Bitcoin at 120K, everyone wants to buy, you know? It's like life in general. You need to be willing to take the risk, willing to study, willing to do more than the average person. Like, this video is far more advanced than most traders will ever come by. And that's exactly why, if you're watching this, it's made for you, because you're not the average person. So, if you're understanding what's happening within the market, you understand there's time cycles that are taking place within the market. Time is the only thing that's moving these markets. It follows a structure. Do you know why? Because a candle can't form at a random structure, but it can form at a very specific time. So 3 a.m., 9:30, there's going to be a candle there that prints. You can somewhat anticipate it being a manipulation candle. So that's exactly what's the time element. That's all what's going to repeat every single day within the market. And then the next thing we have is liquidity. The markets, surprisingly to a lot of you, the market doesn't need liquidity. The markets are actually liquid enough, but you can see stop hunts happening in real time. So obviously on the lower time frames, such as the 1 minute, 5 minute, these liquidity hunts are actually happening at a high frequency algorithm level. However, the markets are liquid enough to pair orders, and this is where, once I get into the market making side of this video, you're going to understand a bit more. So this is where the markets are liquid enough, but liquidity is very important for high frequency trading. And if you're trading on time, this is where high frequency algorithms are really working the most. And I'm not talking about high frequency algorithms that random people have just made and price is just fluctuating higher, the selling, price fluctuates lower, the buying. No, this is very systematic high frequency trading, trading at certain levels within the market, trading in certain pip values within the market, trading at certain time windows within the market as well. Very specific trading. The main thing about trading, this is what most people don't get. Most people think they have so much time. Like, time is everything they have. Every single decision you make and don't make matters so much. Like, if every hesitation matters the most in this business, every time you don't take a trade or you do take a trade matters so much in this business as well. Most people don't get this. You're at the top level. You're trading at the top level, okay? So if you're making consistent profits, if you're trading at the 9:30 Open, New York Open, you're trading against some of the smartest and brightest minds out there. Most people that are trading at desks, at trading floors, they're getting headhunted. That's your competition. And they want to take your money. The market's savage. Everyone is a savage in this market. They want to take your money. So you need to understand, no, I want to take your money. This is literally it. If you can't identify the liquidity, you're going to become it. And no one's going to feel sorry for you at all. No one's going to care. They just want to get richer. That's how most things work. People want to put money in their pocket. If they want to put money in their pocket, you need to stop feeling sorry for yourself. Get up and do something about it. So that's why I'm teaching you this, so you don't randomly enter the market, keep blowing money and putting it into other people's pockets. Unless you take a change, you want to make a change, and you start looking at the markets from this lens. So let's recap what we've gone over. Understanding what matters within the market. We've gone over there's time cycles within the market. There's a daily candle, obviously every single day, 5 days of the week. 3 of those days you need to be executing on to become profitable in the long run. And then moving on to liquidity. So liquidity becomes important at these time cycle highs and lows. So I'm going to teach you 2 of them in this video, which are very repeatable and tradable every single day. And then the third thing is, as a retail trader, this is what I'm going over, delivery changing at key levels. So all 3 of these things are so important as a retail trader, because once you understand them deeply, like understand exactly what's going on, your trading is going to improve a lot more. So now let's move on to the market making side of this video. And so I can teach you why time matters within the market, why liquidity matters within the market, and why delivery shifting at key levels matters within the market as well. So first things first, how does market making take place? What is a market maker? Do any of you know? No one really knows. Why does no one know as a retail trader? Because everyone is consuming the worst possible information on YouTube. Everyone thinks as a market maker, he's got strings on his hand and he's trying to take everyone's money. This guy couldn't care less if you opened a prop firm account, if you deposited 100 grand into a brokerage account. None of these guys care. There's not one market maker. There's probably thousands of market makers around the world. If you live in a major city like New York, if you live in London as well, go sit in a coffee shop in the morning, 9 a.m. on a Monday. You'll probably see a market maker just sat there. The market maker isn't there to hunt stop losses. The market maker is there to facilitate orders. That's it. That's the whole job of a market maker. Now, this is where you got to put your thinking cap on. If the market maker or a market maker with an S is there to facilitate orders, what does that mean? Like, how does that correlate with what I'm trying to teach? Well, if the orders are being facilitated, time-based cycles within the market, liquidity rests above the high and below the low, orders should get facilitated at the high to the low. That's basically my trading in a nutshell. Deviation above the range high, cycle high, trade to the low. That's all my trading is. All I need is this run to the downside to make money. Consistent money as well. I'm not talking about just home runs. I'm talking about consistency within the market. And this is what's going to bring you the consistency. So market making takes place when, for example, someone wants to put a bid in the market. They want to sell the market for $100 million. Obviously, the market has to facilitate this order. So if somebody wants to short the market all the way up here for 100 million, the market maker is going to buy this market for 100 million just to facilitate the order. And by nature, market makers are hedgers. That's pretty much what they are. So you can see price moves to the downside, and then the sell-off position, the 100 million, is probably doubled by now. However, the market maker hasn't sold their position. Once the 100 million position is squared off, someone's wanting to sell all the way down here. So people are selling until the market starts to reverse. Once the market starts to reverse, this is where they will start to position in more long positions. So the long position they had here, they're hedging it all the way to the upside until it gets squared off and they're in a profit. The old quote, the market makers don't lose, it is true. They are hedgers by nature. They know they have a lot more money than me and you. So they are able to hedge the market. They're able to play longer term trades exactly with this framework. And ICT's market maker models are based on this framework. Like, this is just advanced levels of understanding of the market. So this is basic ICT stuff. This is way over there, understanding of the market. This is because Michael's teachings are one of the best on the internet. I will always give my flowers to him, only because no one else really understands the market like this, especially from a retail level and being able to put it in the language he has. So his market maker models, or the definition of them, is a mitigation of orders. So you can see if a market maker is selling a $100 million position or buying one right here, so like this is where someone positioned in a short for 100 million, market maker positions in a buy position. So just hedging, facilitating that order, I'll say. All the way down here, this is where they are in a loss. But the orders are getting mitigated at ICT's mitigation blocks. And they actually are used within the market from a structure level. They actually work within the market because of the language he's taught. So they are not using ICT's levels, the mitigation blocks, but the concept of the mitigation blocks are actually taking place at a higher level within the market. Why does any of this matter to a retail trader like yourself and me? Well, the time cycles we spoke about, they are very important to the market. And that's exactly how market making is taking place as well. Above the marketplace, where we take our high above the cycle, we are looking to pair that order below a cycle low. And that's the repeatable process within the market. So what I'm teaching you regarding my time-based ranges, which we're about to get into if you don't know about them already, that's really where the market's trading at a high frequency level with orders above the marketplace, so above a cycle high and below a cycle low. Those orders are getting paired up, and sometimes my model's going to form within one single candle, and that's because the market's aiming for above the cycle high and below the cycle low. So you really can't do much with that. However, what you can do is know that this is going to repeat again, and you're going to be able to capitalize on it to the fullest potential. And then the next thing is just understanding where delivery is shifting at key levels. So we went over understanding a bit about market making, why it's important, how market making even takes place, and what even a market maker is in the first place. Now I'm going to move on to the charts. I'm going to break down my exact 2 time cycles. I'm going to break down why liquidity is even resting above the marketplace. I'm going to break down why delivery changing at key levels is important. All 3 of these things, I promise, if you follow them step by step, you will become profitable. It's impossible for you not to become profitable. Like, I'm literally saying it's impossible for you not to become profitable, because if you put in the work, if you actually listen and you backtest and you look at the data that's being provided, you are already doing more than 99% of people in this world. You are the one making a change. You are the one watching this video. Most people in the world are so lazy. Everyone thinks that people who become successful, do well in life, they just get lucky. It just happened. It just happened. Like God just chose him. It doesn't work like that. The person who actually studies the right things, that's the most important thing. You can spend months upon years doing the wrong thing, which has no beneficial impact to the money you're going to make. If you're waking up every single day at 4 a.m., you're going for a run, you're going for a jog, you're going to the gym, you're going for a sauna, whatever. All of that stuff is great. How is that going to put money in your pocket? That's where you got to think about how you're going to work smart, how you're going to work towards something that's going to put money in your pocket, and how this is going to impact your life and your trading, most importantly, because a lot of you want to become traders. And I'm teaching you a retail perspective that this is exactly how most people that are making a lot of money from the markets at a higher level, that's how they're viewing the market as well. Not exactly from the time cycles, but they are using cycles within the market. They're using data within the market, and they're also using software which is worth millions upon dollars. But obviously, not everyone has access to that. If you don't have access to that, this is the next best thing. Nothing is coming close to my model, my teachings, and I'll always stand by that because of the results people are seeing. It's not just me, it's a process where if this falls into the right hands, someone might even do better than me. There's no real limit on what you can do with this. So now I'm going to move on to the chart, break this down further, teaching you exactly about the time cycles, liquidity to look for, and then the delivery shifting at key levels. Okay, so the first cycle we are actually going to go over is going to be the one for the London session. Don't worry, we're going to go over the one for New York as well. But the first one is on New York time, so Eastern Standard Time. So no matter about daylight saving or anything like that, if we do have daylight saving, then you're going to be on UTC -5. If we don't, then you're going to be on UTC -4. As long as your trading view is set to Eastern Standard Time to New York time, you're going to be fine. So right here, you can see we have 112 and then we have 212. This is one cycle within the market. There's so many cycles within the market that I'm not going to teach simply because they're too good to be out there publicly, and I know a lot of people will just plagiarize what I'm teaching. They will also just say that they came up with it. So I'm keeping it to myself, but this is one of the ranges that I'm willing to give away for free. I'm willing to do this to give to you. I trust you enough to take this video on board, study it, and actually apply what I'm teaching if you're actually serious about making money from trading. So the first range, 112 to 212, this is where a cycle happens within the market. So the market obviously opens at 6 p.m. That's the daily candle. This is where we have one cycle. From 6 p.m. all the way up to here, there's loads of cycles within the market too. This is the main one, especially for the London session that you're going to be trading. So exact same process as we're looking for. We're looking for one side of the range to be taken. So liquidity rests below this low. Liquidity also rests above this high. So for you to trade this market, you need to look for liquidity to be taken below this low. Now, what do? You're not buying straight away. You're not buying blindly just because we've taken out this low. So you can see right here, once we take out the low, if you want to buy long, with a stop loss just below this low right here, I can almost guarantee that you're going to get stopped out. You can see price runs your stop loss. So how do you not do this? How do you stop yourself from entering early and getting stopped out and then price moving in your direction? This is where my 3 candle rotation is going to come into play using this understanding. So when you're bullish, you're looking at 3 down close candles. These 3 down close candles are going to be very important because they're going to show you when the market's actually shifting delivery for you to get into the market, execute on a position. So you can see there's no 3 down close candles. Even if we eliminate these up close candles, there's no 3 consecutive ones. If we eliminate this up close and this one, then we have it. But again, we haven't closed above with a body. So I'm going to wait for 3 distinct down close candles to form and the price to close above. So wonderful. As you can see right now, 1, 2, 3. Market closes above this now. We've closed above with a body. Once we've closed above with a body, what do we have right here? We have a gap made within the market. This is where a lot of you need to stop entering the market prematurely. This is where a lot of you are like chasing the market. You're like, oh no, it's going to run without me. I'm going to put a stop loss just here. This is where the market will blow through your stop loss and then run into the direction. If you waited for price to retrace into the gap and then bought, that's exactly where you would have had a winning position. And we also trade into the high of the range above here. You can see once we take out the high, price becomes very sensitive. This is one rule that I want you to take on board from this video. Always buy into down close candles. So the market is trading into a down close candle and the down close candles are trading lower into it. Only buy that. Never buy if the market is trading higher. Always buy into the down close candles. Stick to this rule. This rule is going to stop so many early trades from you. And then obviously using the 3 candle rotation, so market shifting delivery at key levels. We're using 3 down close candles because there's going to be an opposing fair value gap. This opposing fair value gap fails, we can look for the buying setup, market pushes to the upside. And that's pretty much all I'm looking for every single day using this range. We have the cycle, we have the liquidity above the cycle and below, we have delivery shifting with the down close candles. Now the market can trade higher. Now we're going to go over the range for the New York session. So this range starts at 812 and ends at 912. So again, this is a cycle within the market. This is one cycle that I'm willing, and I trust you watching this video to actually take this on board and study it and trade it to the best of your potential. And I know once it falls into the right hands, you will be making good money from this, because it's not only me making money from the markets, it's others using this exact framework. So what is the first thing? Going back to the start of the video, understanding the cycles within the market. There is cycles holding liquidity. So let me get this tool. We have buy side above this high, sell side below this low. All we're looking for is a run at the high. If we take out the high, we're looking for a delivery shifting at a key level. Delivery shifting at a key level becomes the cycle high because this holds liquidity. Going back to the theory on market making, if we take out the high, the orders need to be facilitated. So for example, someone selling for 100 million, we need to facilitate that order to trade to the downside. So once we take out this high, we're looking for the delivery to shift, show us we want to trade lower, and then we can trust a selling opportunity into the sell side liquidity. So as you can see right here, 1, 2, 3, delivery should completely shift from this point because we failed this gap. We are now trading below this low. We have shifted delivery completely, taken out the high of the range. The low of the range is no longer safe. We should drop into there with ease. We also have failure swings resting below this low. So going back to the start of the video, if you wanted to be aggressive on a short, you could sell right below this low. But if you wanted to do that, you need to have a logical stop loss. Either it's going above this high to target the low down here. This is for a 1 to 2 trading setup. If you're looking for a retracement up here, looking for an up close candle for price to trade into, that's also something that you can wait for. But one thing you got to know when you're trading New York, price can quite simply just do this and just rally on to the downside and just trade into the objective without retracing at all. Delivery's completely shifted. There's liquidity resting below the marketplace. Orders have already been paired. They need to be distributed. If you wanted to be more aggressive, this is what I would be aggressive with. If you wanted to refine this stop loss, I would say minimum at this fair value gap. And one day I will teach the importance of breakaway gaps. I do have something special launching for 2026, especially for those of you that want to learn more about the markets from my lens, but aren't ready just yet to join the one-on-one program, because that is going to be shutting down pretty soon, because that's going to become my inner circle for those people that did join early and wanted to focus on the exact approach from the markets. But don't worry, in 2026, I do have something special launching, and it's going to be very rare. So the academy will be shutting down pretty soon. If you do want to apply for the program, there is going to be a link in the description down below. There's going to be new things being added inside of there, but the main thing is whatever's being taught inside of there, it's all NDA based. So nothing will be coming to the internet, and you won't be seeing any of the logic that's being taught inside of there publicly anywhere else as well, because I am the source of this information. So I hope you did find this video insightful and you did learn something from it. The main focus was teaching you to stop looking at loads of random strategies within the market, bringing you clarity to what's actually going on, the cycles within the market that form every single day. You need to focus on one cycle. I've given you two. Either you trade New York or you trade London. I've given you two of them. You can pick. I've spoiled you. I've spoiled you with choice for free. And now it's your turn to take this on board. I've even given you exactly what to wait for to know the market's going to trade lower. We have the candle rotation. And all of that comes together to give you a high probability trading setup because you have liquidity, you have a range, a cycle to be specific, and you have delivery shifting at key level. If you have three confluences to your trade, 9 times out of 10, that trade is going to play in your direction. If you are struggling with a certain topic in trading, leave it in the comments down below and I will look to cover it in a video in the near future. With all that being said, remember I'm rooting for you and I hope you do find success in this business. As always, enjoy the rest of your day.